Welcome back. Let's take stock of the markets and where we are headed. One view which is emerging is that perhaps the central banks are close to the peak of their hawkishness. So the peak hawkishness may soon be behind us. And that's one of the reasons which has fueled a rally globally. The Dow in the last 2 weeks has seen a rally of close to about 10% in the last few days. We've seen a recovery even in the tech stocks. Now, the Indian markets have been big outperformers even when the global markets were in distress. But if the tide turns globally and things are looking up on the global front, what could the outlook be on the Indian markets? And we've got a pretty good idea of what the earnings season has also been so far. Sunny Agrawal of SBI Securities now joins in to talk about the market fundamentals. Sunny, how would you assess the markets right now? Valuations continue to be at a premium versus emerging markets, but relatively, we continue to be the cleanest shirt in the laundry. Your call on the markets right now, Nifty and the sectoral approach.
Good morning, Rima, and thanks for having me on the show. Markets have, as you rightly pointed out, that market has rallied a bit away in the month of last month. And at the current level, we are cautiously optimistic and we would like to approach the market bottoms up, wherein we would like to take a bet on sectors which are reporting a good numbers or a company-specific approach. Case in point, banking sector. Banking sector, a majority of the banks are reporting a very healthy set of numbers with a very good visibility in terms of credit growth as well as NIM growth. So what we have seen is that increase in the deposit rate is lagging behind the increase in rate on advances. So that would lead to the healthy NIM growth going forward. So banking is one of the sector which we like, and we would like to approach this sector based on valuation. So right now, if we see that HDFC Bank is trading at a relatively cheaper valuation as compared to ICICI or for that matter Axis Bank. So HDFC Bank, having earlier traded at 4 price to book, right now is available at 2.5, 2.6 FY24 price to book multiple. So HDFC Bank is one of our top pick as far as banking is concerned. Similarly, on PSU side, Bank of Baroda trading at less than 1 price to book. So we would like to approach the market in a sector specific or stock specific way. So markets are trying to find a value where the valuations trying to identify an idea where valuations are relatively cheap. For example, within FMCG, ITC is the street favorite because of the cheaper valuation as compared to HUL or Nestle. Or for that matter, we have recently seen that Maruti has reported a very good set of numbers with the increase in margin, healthy order book. So within auto, Maruti is one of the favorite pick for us also. Within IT, what we have seen is that KPIT, mid-cap or mid-sized companies like KPIT outperforming its large peer set. So KPIT is, and again, the growth outlook, the company has guided for a very healthy growth outlook. So within IT, KPIT is one of the stock we would like to approach. Within consumer space, again, United Spirits, what we have seen is that
Sunny,
the volume growth in a prestige in above.
Sunny, is my voice reaching you? Sorry, sorry to interrupt because you mentioned KPIT Tech, so I just wanted to, delve a little bit on that, right? I mean, if you look at the chart, from the lows in June, KPIT Tech has had a phenomenal recovery. It's up almost 60% from the lows that it hit in June. And then the company also went ahead and raised its organic growth outlook for the full year. Is the risk reward still favorable for names like KPIT?
Sonia, you rightly pointed out that the stock has seen a ferocious rally in the last few days. And right now, I mean, the valuations are north of 40x FY24 PE multiple. So, I mean, the approach right now, I mean, if somebody wants to make a fresh position, KPIT, maybe a buy on dip is the right approach. But ultimately, whenever the markets are in downturn, whenever we get opportunity to enter at a lower price point, so the favorite pick will be the companies where the earning outlook or the growth outlook is very healthy. So from maybe in a short-term perspective, as you have rightly pointed out, the stock has rallied a lot. Maybe a buy on dip is the right strategy for KPIT.
Buy on dips is the right strategy for KPIT. Got that. So, I mean, if that dip comes about, right? I mean, it's been a one-way rally for the stock in the last 6 months. The other stock that you like, since you said it's a bottom-up stock pickers market, is United Spirits. Now, I just want to understand what the growth trajectory is over there because, demand has come back in a big way. Things have opened up. The hospitality sector has come back. So what kind of growth do you see for United Spirits?
So, United Spirits, basically, we feel there are two or three kinds of trigger. One first trigger is the premiumization. As we have seen that volume, United Spirits has recently hived off its basically a portfolio of 11 to 13 brands to one of the company. And gradually this will lead to the mix shifting in favor of premium products, and that will automatically lead to the increase in margin over the medium to long term perspective. The second trigger which we see in United Spirits is the cooling off in commodity prices. So whether it is glass prices or packaging material prices, so we feel that going forward, United Spirits will be one of the beneficiary of the cooling off of in the commodity prices. And one more trigger which we feel over here is basically the free trade agreement between UK and India, which is likely to happen over next few days or few months. So with the prices coming off due to the reduction in import duty, likely reduction in import duty, so United Spirits can be one of the big beneficiary of all these three factors. And in addition, as we have seen the festive season kicking off, so definitely demand is likely to be good over in the United States. Yeah.
Okay. The other stock that you like is Moltech Packaging. Now, many of these packaging companies actually have come back in a big way. If you look at the last 1 year, Moltech had done nothing, right? I mean, it's just starting to move now. It's been in that range of 600 to 700 for the longest time. What do you see as the triggers?
So Moltech is going to have a capex of 250 crore over the gross block of 300 crore. So it's a huge capex. And what we feel that once this capex is implemented, the current capacity of Moltech as of FY22 is around 45,000 metric ton. And we expect this capacity to go up to 54,000 metric ton by FY23 and 70,000 metric ton by first half FY25. So if I take a 80% capacity utilization and on the 70,000 metric ton capacity, and if I take a current realization, I feel the company has got a capability to do a turnover north of 1,200 crore in FY25. And mind you, the current turnover in FY22 was around 630 crore. So we see over the next 3 years, turnover getting doubled. At the same time, being a packaging company, the margins are almost stable. So the agreements in terms of pricing, they usually try to pass on the price with a lag of 1 to 2 months. So margins are quite stable in any packaging company. And at the same time, the company is right now on innovation quotient front. The company is doing a lot of good things. So if you see, they have developed a new product for a DEF, which is the diesel exhaust fluid. They are venturing into the pharma packaging, which is again a very high EBITDA per kg market. So overall, we feel that for Moltech, the earnings may grow from the current 60-70 crore per annum to around 120-130 crore over the next 3 years.
All right. Okay. We will leave it at that, Sunny. Thanks a lot for joining in. That's SBI Securities with all of their top stocks to focus on. By the way, just a word on the market continues to hold very steady now, 18,140 almost, 127 points higher. Just a matter of time before we hit new highs and lots of numbers trickling in. So we'll do one thing. We'll take a quick break. We have some big earnings for the day. So key expectations coming up on the other side of the break. Stay tuned.